Alright everyone, Cowboy Trades here, welcome back to the channel for another update on the market. So Bitcoin, the altcoin market, the bond market, DXY and equity markets are all at a very critical decision point right now. It's looking like these markets are setting up for one of the most important decisions that has been made for the past few years. And while Bitcoin has been trading sideways for the past 25 days waiting for a clear direction either up or down, while the markets are a little bit sideways and choppy and boring right now, I do have some new and updated charts which we haven't previously discussed over on the channel, which I did want to run through with you today. So let's take a deep dive into the markets. First of all, let's start off with a quick update on the charts we've been looking at for the cryptocurrency markets. Not too much to update, so we'll fly through these and get straight into the new charts. In terms of the macro total cryptocurrency market cap, I still do believe we are potentially setting up for this weekly head and shoulders pattern. While we did have a 9% move to the upside on the weekly time frame, which was battered down about 5%, meaning we're only up about 4% this week. Due to the XRP case, you can see that we once again rallied right up to this orange line that we got rejected on the 10th of April. If we zoom out a little bit further, you'll see the significance of this line. This is from the bear market lows following March of 2020. From the swing low up to the swing high of the Fibonacci. This is a very important range, the 618 fib in terms of this bull run. We are still getting heavily rejected underneath the 618 Fibonacci and also underneath this red resistance box. It is proving to be a very hard box to get above. So unless we do clear this level, I still am of the opinion that we should be moving down to around about the neckline of this pattern. That is a 16% drop down to 994 billion. In terms of the total two, on the daily time frame, I do want to highlight, since that XRP rally pushed up the altcoin market, we came right up to this liquidity pocket right here. If we're looking at the liquidity swings over on the Lux algo, you can see 62.4 billion was trapped on this peak here. There was lots of liquidity trading within this sideways range. We were pushed back down to the downside, created a liquidity pocket. Market makers pushed us right back up to this level. We deviated above it, and now it's looking like we're trading right around where that liquidity pocket is. In terms of the higher time frames though, not too much to update. We have had a bounce over on the 200-week moving average. You can still see that we are getting stuck underneath the resistance of the long-term moving average on the weekly EMA ribbons. The last time we came up to the weekly EMA ribbons, you can see we had a SFP rejection at 663 billion before a sharp move back down to the downside. You can already see we've had a move above the EMA ribbons. We came up to 622 billion, about a 40 billion decrease from the past peak. And as you can see, we're already having a sharp move to the downside, although this week is still in the green. In terms of Bitcoin, we're still trading within this range that we highlighted in our previous video. Really, like I said in the previous video, I'm just waiting for this range to tell us which direction we're breaking from. I personally think we're moving to the downside because of all the reasons that I mentioned in my previous video. However, like I said, this range has been so boring for the past 25 days. I'm really happy to play either side of the markets right now. There hasn't really been any clear opportunities to trade within this range, unless of course you are a scalper on the lower time frames. I am a scalper myself. Sometimes I prefer to trade the higher time frames. The problem is I can't really upload scalp videos on YouTube. By the time I'm, scalping these ranges here on the 1 hour time frame, by the time I record a video, edit it and post it, the time to enter the trade has gone and the price is moving away from my entry points. Occasionally, if I do see a really good scalp, I will post it over on my Discord. So if you want to join, make sure to head over to my YouTube, click on the about section and come and join the Discord, where I do share some additional trades every now and then. What I do want to highlight since the last video is that we are forming a potential bearish pennant right now over on the 4 hour time frame. You can see, we had that rally due to XRP, and then all of a sudden we just got absolutely rejected, as this ended up being once again another SFP swing failure pattern above the top of this tight range that we've been trading in. Since then, you can see that we found a little bit of support on the bottom of the bull flag. This is this white ascending trend line that you can see over on the screen here. If we do zoom in, you can see over on the 4 hour time frame with these orange lines, we are forming a potential bearish pennant. Now, if I do grab the measured move of the pole and take a breakdown target, you can see this could potentially lead us down to 28,250. Really, you're just waiting for this range to break, like I said in the previous video. If we do manage to break the range to the upside, we do have a CME gap up to about 36,000 that I could potentially flip short-term long into. Once again, we would need to see a break above this range, a retest of the range. This is something we haven't done before. We've broken above the range and we've got instantly pushed back down to the downside. We need to see a retest of this white trend line around about 31,600. We need to see volume coming in and we need to see a higher high for me to be able to enter a long trade to see us come up to 36,000. On the flip side of this, if we do start breaking to the downside of this bearish pennant, we break to around about 29,900. We retest round about 30,200. This could be an opportunity. If volume does start to come in and then we start to see lower lows, this could be a great opportunity to short down to round about where the bull market support bands are, 200-week moving average between respectively 27,700 and 27,000. Of course, we've got a massive CME gap down here at 20,300, and we've also got a bark pattern round about here, 24,800, which we could come down to the downside of. However, if I was trading this range, I'd take the more conservative approach and take most of my profits when we do come down to these two regions. Additionally, like we discussed in our previous video, Bitcoin whales did take the opportunity to sell the other day as Bitcoin steadily approached almost 32,000. If we do zoom into the addresses with more than 1,000 Bitcoin, you can see there was a sharp drop off in about a day or so from around about 2,038 addresses all the way down to 2,019 addresses. Bear in mind the bear market lows for these addresses were at 2007, so we're really not too far away, only about 12 new whale wallets since the bear market lows. So institutional money right now is really not too interested in Bitcoin. Now, wrapping up our regularly scheduled programming with what's happening in the bond market before we do dive into a plethora of new charts. If we do come over to the iShares TIP ETF, I believe we mentioned this over on Thursday/Friday before the weekly close, but you can see we have now solidified a weekly candle body close right underneath this year-long bear flag pattern. Now, the iShares TIP ETF, basically this trades inverse to government bonds, and this is one of the most important charts in the bond market. If the iShares TIP ETF breaks down into new bear market lows, you're probably going to see new all-time highs across the board for US government bonds, which is something that we have been seeing in the past few weeks or so anyway. If we do come over to the US 2-year government bonds, you can see this pushed up to new all-time highs last week. In terms of the 10-year government bonds, we're very, very close to making new all-time highs. We're just making higher lows and higher highs, breaking out of this bull flag right now. So yeah, like I said, in terms of the iShares TIP ETF, we're very, very close for these treasury inflationary protected securities to break down into new bear market lows. For those of you who are new to the channel, this is a very, very important chart because this is a precursor a lot of the time of what happens in the rest of the markets. You can see over here, the iShares TIP ETF broke down into new bear market lows following the end of August 2022. Bitcoin, the equity markets rallied for a little bit against it before breaking down into new bear market lows about a month or so later. So this is really a macro signal. If you see the iShares TIP ETF next week getting a solid rejection from 107.4 and continuing its descent, you're probably going to see new all-time highs in the following weeks for the 2-year and 10-year government bonds, which are going to continue pushing up. The DXY may regain some strength as the equities begin to take that next leg back down. So there we go. There's an update in terms of our regularly scheduled programming. Let's now dive into some of these new charts, which we previously haven't looked at, just to freshen things up a little bit. Now, let's start off over on the total 2. What I want to highlight over here is 7 different situations in which we've seen 3-month drawdowns or more in terms of the price action. Now, you can see over here, we saw a 3-month drawdown for the altcoin market. This was in a bear market. Once we saw 3 months of up, that let us know that we were breaking into a bull market. Over here, this was the one situation where you saw 3 months of downwards price action, but then we continued to push up in terms of the bull run. Over here, 3 months of downwards price action marked the top of the bull run, moving into a bear market. Over here, we had a 1-month impulse after this 3 months, but then we broke back down for another 4 months. This was clearly continuation, and we moved lower in the bear market. Over here, this was after the local top in 2019 before continuing back down. We saw 4 months of down, 1 month back up, 2 months back down, 1 month up, and then the 2 months back down, coming back down to the bear market lows. So in pretty much all of these situations over here, you can see after the 2021 top coming into 2022, 3 months down, and we made new bear market lows. We had a little bit of an impulse back up to the upside. For the past 4 months or so, you can see we've had 3 months down, and we've had 1 month back up to the upside. Now, based on pretty much all of these situations, 6 out of 7 times, every single time we've seen 3 or 4 month corrections to the downside, we are still in a bear market. From a probability perspective, there's only about a 1 in 7 chance that we are in a situation like this where we could get further continuation back up to the upside, and I'll show you why, based on a chart that we're going to look at later in the video, why this is probably not that 1 in 7 chance. It's also a little bit funny from a sentimental perspective that if we do zoom in, you can obviously see the past 3-4 months for the altcoin market has been absolute doom and gloom. We've been breaking down month after month after month. A lot of the altcoins that I cover have been making new bear market lows, and then we see 1 month back up to the upside, creating a higher low, and everyone's acting like this is a altcoin season. Well, if this is an alt season, I would absolutely hate to see what an altcoin bear market is. Moving on from here, in terms of the DXY, one thing that we have highlighted in previous videos is the fact that we really do need to hold round about this 100 down to 99 mark. You can see this is pretty much one of the last lines in the sand that we've got. If we draw our Fibonacci from the 2021 swing low up to the most recent bull run high for the DXY up in 2022, you can see we're sitting right on the 618 fib right now at 99. There's also the 200-week moving average down here at 98.16. If we start to break to the downside of this, this could be significantly bullish for risk on assets. However, I do want to provide one situation in which this hasn't been the case. Now, if we do come over to the DXY over on the top of the screen, and then we come and look at the S&P 500 at the bottom of the screen, bear in mind, we're looking at the situation of the 2000 financial crisis. So, of course, if we overlay Bitcoin over in this chart, Bitcoin didn't start trading until, much later. So unfortunately, we can't really see how Bitcoin would have acted in this scenario. Why are we pointing out the year 2000? Well, because this is when we saw a great financial crisis. And if you have been watching my channel, or you do follow me over on Twitter, you'll know that I've outlined a bunch of reasons in why I think that real GDP is going to be coming down to around about 0.7%, and we could be getting very dangerously close to recession territory like we saw in the year 2000. These are all things that I've talked about in previous videos, so like I said, I want to keep this segment relatively new. If you want to pause the video and look at some of these tweets, which I have posted over on my Twitter, then I'll let you do that now. But yeah, run through this. You can pause the video if you want, but let's get back right into the programming. Now, if we come over to the DXY, what I do want to highlight is there have been situations in recessions where we see real GDP for 2 successive quarters dip beneath the 0% line, indicative that we are in a economic contraction, also known as a recession. This happened following 2001 into 2002, and what you can actually see is the S&P 500, the equity markets, were breaking down into recession territory as real GDP broke down, and you actually saw the DXY break down as well. So a lot of the time, in fact, most of the time, equity markets and risk on assets are inversely correlated to the DXY. However, in recession territories, it's often that you see US stocks and the US dollar trend in the same direction. So if there's a US recession, that is bearish for the US dollar, but it's also bearish for US assets. Another new chart that I do want to talk about is what is happening over in Bitcoin right now and comparing this to global net liquidity. So once again, if you're a veteran of the channel, we've looked at net liquidity in many different forms. For example, we posted this over on Twitter, and we did make a YouTube video about this. Recently, we've been talking about how the US Treasury cash balance has been falling to new yearly lows. We've been talking about how the M2 money supply is breaking down to new lows. We've been talking about how the Fed balance sheet is falling to the downside. Remember when we had that spike in liquidity, everyone was calling it quantitative easing when the banks were allowing a little bit of excess liquidity to come in for their banking friends. Everyone was saying quantitative easing. I was saying this isn't QE and we're going to see this reverse very quickly. And, as you can see, the QE quote unquote liquidity has been getting drained out of the market. Now, in general, if we are looking at global net liquidity, this is an oscillator which I haven't previously covered on the channel, but in general, if you've been watching the channel, we've been talking about the interest rates, we've been talking about how that is affecting liquidity conditions, how that is affecting, the net percentage of banks lending to consumers, lending credit lines, etc. We've been talking about lots of different liquidity metrics. This is a new one, the global net liquidity. If we come over to the monthly time frame logarithmic for Bitcoin, what I want to highlight is if we look at the bull run tops, if we look at 2011, this was supported by new all-time highs in global net liquidity. If we come over to the next bull run top in 2023, this was supported by a new all-time high in net liquidity. If we look at the next bull run top, all the way over to December of 2017, this was supported by a new all-time high in global net liquidity. Coming over to the next bull run top, November of 2021 for Bitcoin. What was this supported by? Well, you guessed it, another new all-time high in terms of global net liquidity. So Bitcoin loves global net liquidity. If there's excess liquidity in the markets, let's just take this one for example. Now, you will remember what happened exactly here. Now, I can't say the exact name of it over on YouTube, but remember what happened in March of 2020. Tons of liquidity got pumped into the markets. Now, if you're living in the US or maybe you're living in the UK, if you're working a 9-to-5 job, your job probably told you to stay at home and they'll just print some free money to give to you. Tons of that money flew into the economy, and Bitcoin absolutely loved this. A lot of people, I remember seeing articles about this, that when everyone was getting $1,200 stimulus checks, on the days that stimulus checks were being printed, $1,200 was a very, very common purchase price for Bitcoin. Lots of people were pumping into Bitcoin as liquidity was coming into the markets. And right now, we're kind of seeing a little bit of a contrarian rally. If we do zoom in over on the monthly time frame, what you can see is since this bottom over here for Bitcoin, this actually correlated to a top in terms of global net liquidity. Now, this is a bearish divergence. We're seeing price completely disregard the fact that global net liquidity is coming to the downside. There's really not too much volume trading in Bitcoin right now. Volume is exceptionally flat. And what I've really been highlighting on my channel is this is not a rally supported by a liquidity. There is really not much liquidity in the markets, so it only takes a small amount of buying volume to make the price whiplash up, and it only takes a small amount of selling volume to make the price whiplash back down. And like I talked about earlier, we're not really seeing any significant market makers. We're not seeing any whales kind of come in and make significant moves in the markets right now. They're just selling every now and then whenever they see retail traders, pump the price up dramatically. So my point is here that this rally that we're currently seeing with Bitcoin is really a shaky one. I wouldn't be thinking this is a new bull run. This is absolutely not supported by net liquidity. And as I've also been discussing on the channel, I believe net liquidity is going to continue breaking to the downside. Why? Because I think the Fed is going to start raising their interest rates further. Maybe not in the next FOMC meeting, which I believe is in about 2 or 3 weeks, but in the next one, I definitely think they are. And this is because of what I highlighted in my previous videos. Now, you all know that CPI year over year has come down to 3%, right? This is because if we come over to the US CPI Index, not bound on an annual year over year basis, this is actually how they calculate CPI year over year. Not a lot of people even know this chart exists. They just look at CPI year over year. CPI is actually a large index not determined by a year over year basis. They look at this and they simply look at the past 12 months and say how much has CPI moved up in the past 12 months. Now, you might be thinking, wow, CPI has come from 9% all the way down to 3%, but nothing's cheaper in the grocery stores. Everything's still going up in price. That's because the CPI index is still pushing up to new all-time highs. But if we take things back a month or so, you can see previously we've been measuring data points from this massive, massive parabola in terms of inflation. So in the past month, it was, 4.1%. If we measure it down from the previous month before then, you can see it was 5%. What I've been highlighting and what I highlighted in this video over here, inflation bottoms in June, is the fact that for the past 6 months, we've seen inflation come down because we've been measuring CPI year over year from this massive parabola. But now for the next 6 months, CPI is going to be measured from a absolutely flat rate. This time last year, from June of 2022 all the way up to December of 2022, CPI remained absolutely flat for about 6 months. And as you can see on the CPI index, month over month inflation is actually still increasing despite the fact that CPI had a massive drop year over year in the past month. CPI month over month is still increasing. So we know inflation in the past 6 months or so is still dramatically increasing. And if we do continue with this line of attack that we are currently faced with over in the CPI, we could potentially see CPI year over year having an increase of up to about 6% from December 2022 to December of 2023 because of this, because inflation is going to be starting to come back on a year-over-year basis, I think the Fed is going to continue raising their interest rates. I think banks are going to continue tightening their standards for credit. I think lines of credit are going to continue to become delinquent. That is further going to exacerbate the status quo of increasing interest rates and tightening the standards of which money is being lent out to consumers. So there we go, my friends. Like I said, I just wanted to provide some new updates in terms of the markets. For the past 25 days, like I said, Bitcoin has been relatively boring. We do have a pattern developing on the 4-hour time frame, which hopefully gives us some clarity in which direction Bitcoin is going to be moving in next. You know my thoughts. So for today, my friends, that's all I've got. As always, like I said, for the past week or so, I've been relatively inactive compared to usual because we've been the same price, we've been trading sideways, there's not too much to update. However, when the markets do come back with a clear direction, when the markets are a little bit more interesting, when there's more things to talk about, I'll definitely be moving back into more regular updates, maybe daily updates once again, when the markets get a little bit more interesting. Until then, go enjoy the rest of your weekend, go enjoy your summer. We could be in this range for quite some time, so let's just take things one price target at a time. Let's see what happens with this range. Once we finally break out, I will be back and I will be letting you know what my updated thoughts are. So for today, my friends, that's all I've got. If you do enjoy my content, make sure to let me know down below by leaving a like and a comment, share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Follow me over on Twitter at 618_cowboy for much more of these posts. It's been your boy Cowboy Trades. I'm out. Peace.